Hi everyone, and welcome to the Heartland Reverse Mortgages webinar hosted by MPA. My name is Rebecca Pike and I'm the editor of MPA. It's a joy to have you join us here today for this incredible session on how you as mortgage brokers can diversify and grow your business with reverse mortgages. With a rapidly increasing aging population combined with the increased costs of living, seniors are seeking better finance options to support their retirement. This is where you can come in. Over the next 45 minutes or so, you will hear about the growing demand of reverse mortgages, market insights, what Heartland offers, and everything else you need to know about offering this product. For the last 15 minutes or so, we'll be going through some questions, which I invite you to send in over the course of the webinar. You can use the Q&A function at the bottom of your Zoom screen. So please send in some questions throughout the session and we'll get to them at the end. I will now hand over to Sharon Yardley, Heartland's Head of Operations, and Artie Mason, Senior Manager, Intermediaries. Take it away. Oh, we can't, Sharon, we can't hear you. You're both on mute.
Cool. Thanks for that, Rebecca, and thanks MPA for having us. So we'll mute our videos now and get started with the presentation and see you at the end. So first, we'll give an introduction on Heartland. So Heartland Reverse Mortgages was established in 2004 as Australian Seniors Finance. Since then, we've released over $1.3 billion in home equity and assisted over 21,000 Australian seniors live a more comfortable retirement. We currently have over 11,000 customers and $966 million in financial receivables as at the end of last year. In 2014, we were purchased by Heartland, a New Zealand-based financial services group with a history stretching back to 1875. Our parent company, Heartland Group Holdings, is listed on the New Zealand and Australian Stock Exchange. We are committed to doing the right thing for our customers, shareholders, brokers, staff and community, and we support Dementia Australia and have done so for a number of years. And each of our staff is 100% committed to the banking and finance growth. So now we'll talk through the seniors market and the opportunity. So as Rebecca mentioned in the introduction, there is a growing demand for reverse mortgages and financing to age in place. We know there is an aging population, and some of the statistics on this slide tell us that story. There are over 20,000 people who are turning 65 every single month. And as well as Australians getting older and people purchasing property later in life, the one thing that remains consistent is that home ownership in seniors remains so. 85% of 65 plus, of people aged 65 and over, own their own home, and that has been consistent for quite some time. When we look at the growing demand in the aging population, and we combine that with research that we sponsored with RMIT, we can see a strong and powerful story for the need of reverse mortgages. So the key findings from some of the research that we've had completed shows that 93% of older Australians' ideal is to remain in home ownership, so to own a home. But more than owning that home and continuing to owning that home is to own and remain in the home they're in. 90% wish to age in place and remain in their current home. There's a lot of benefits to remaining in place, and that includes community, family memories, space, security, and studies have shown that people who age in place live longer and are more well in their lives. But 36% of seniors live in a home that may be unsuitable for aging in place, and 29% of seniors say they cannot afford the changes needed to enjoy their home and to remain in place, which is what they desire and deserve. So now we'll look at the reverse mortgage market currently. There's a $3.4 billion market as of September last year. Heartland remains the leading provider in reverse mortgages with a current 12-month market share of 28%. Many of the larger providers have exited in the past few years, all the major banks, and the large banks have exited. So as well as, some smaller finance providers in the market, the biggest competition is actually apathy, lack of awareness, and tightening of the belt. People choose sausages instead of steak to turn off the air conditioner in summer because they don't realise there is another option to help them age in place, and that is releasing the equity from their own home. Recently, there has been increased awareness, an extension to the pension loan scheme last year, and late last year, the retirement income review has created more awareness, provided more validity, and helped people hear the words reverse mortgage. In addition to that, it is arguably one of the most heavily regulated consumer finance products in Australia. So there is more knowledge and there is the regulation to support the releasing of equity in people's homes. Now we'll move to a poll question. So we had one question and that's popped up on the screen now. So do you think reverse mortgages are growing in demand? So we'll just give it a minute to show and then we'll see what the results are. So 88% of participants believe reverse mortgages are growing in demand, and that is exactly what we're seeing as well. So now we'll talk about what reverse mortgages are and how they work, and we'll take you through that information. So what is a reverse mortgage? A reverse mortgage is just like a normal home loan, except it's designed for the needs of seniors, for those who are aged 60 or older. The main difference is no regular repayments are required. They are voluntary, repayments can be made at any time, but if the interest is not repaid each month, it is added on to the loan and it does compound, with the total loan only repayable when the last borrower exits the home. That's usually when they sell, pass away, or move into care, and that is the only times the loan is due and repayable. Heartland offers 3 different reverse mortgage offerings. We offer the standard reverse mortgage for people who are living in their own home and wish to use that as security. We offer an aged care option when all customers have moved into aged care. And we also offer a secondary property for investment properties and holiday homes. And Artie will talk about those things in a little bit more detail in the presentation further on. So most customers use the loan for multiple purposes. The top 5 include debt consolidation, and over 50% of all Heartland applications that we're seeing at the moment is to repay some kind of debt and consolidate it to increase cash flow so that funds can be spent on lifestyle, utilities and expenses. The number 2 is home improvements, which is again around 50% to support ageing in place. The next 3 is to supplement income for travel and for motor vehicles, is around 20 to 30% of all customers will take up one or all 3 of those. And all of these uses help people to live a more comfortable retirement using the equity from their home. But quite often we hear the words comfortable retirement and we're not, people don't really know what that means or what kind of income is required to support that. So I'll hand it over to Artie now to talk about what a comfortable retirement is.
Thanks, Sharon, and hi everyone. It's great to be here and have the opportunity today to talk to you about our reverse mortgage product. We know seniors need help in funding their retirement and living comfortably, but what does a comfortable retirement look like? The full age pension for a couple currently is about 33 to 34K annually. For seniors who are on their own, this is even less. And for about 52% of pension recipients, their pension is their main source of income. But the pension alone can only cover basic needs, basic food, public transport, and basic utilities. So with not much in super or savings and only receiving a modest pension, and the rising cost of housing and living leaves a lot of seniors with not much to live on in their retirement. Additionally, they may have residual mortgages and debt, which they are servicing monthly, and this again leaves them with not much to actually live on. This is where an equity release product such as a reverse mortgage can assist seniors to live more comfortably in their homes by providing them the ability to retire existing debts, modify their homes to make it more age-friendly, and maybe set up a cash reserve like a line of credit for urgent or ongoing medical needs, or for future travel to see their loved ones. They can even set up a regular payment, which can be set on a monthly, quarterly, or annual frequency to supplement their pension, and have a regular income stream to help with things like getting a cleaner to clean the house, servicing the car, or going out for a coffee or a meal. So we have another poll question here, and we'll put that up. So what are the two most common uses of a reverse mortgage amongst Australians? You can select two, and we'll give that a minute. Excellent. So as we can see, people have been paying attention. Repaying debt and home improvements is correct. Australians use a reverse mortgage to fund, existing debt repayments, consolidating those credit cards, and just having peace of mind, not having to pay those monthly repayments, and making their homes more comfortable. Thank you, Rebecca, for that. Here we're going to look at what are some of the benefits of a reverse mortgage. For a good proportion of seniors, their home represents their biggest asset and most significant store of wealth. This is where a reverse mortgage can help free up funds for seniors to live a better retirement and access those funds when they require it the most. Things like being able to use the heater or cooler when needed the most, as Sharon mentioned, such as in peak winter or summer, removes the stress from those everyday bills, eliminating the stress of monthly debt repayments and obligations. The RMIT research Sharon mentioned earlier notes that older Australians have a strong desire to continue living independently in their communities. And this is for personal autonomy, flexibility, and to maintain their connections with their friends, family, and neighbours. And customers can also have the flexibility of multiple drawdown options with us, which is tailored to suit their specific needs. We can provide an initial advance for urgent requirements, set up a regular income stream to help them out with daily life, and keep funds in cash reserve for that rainy day. So let's look at Heartland Reverse Mortgage's finer details of the product. Our product is available to seniors aged 60 and over and is market leading due to the flexibility it provides customers. With multiple drawdown options, ability to repay when they want and redraw at their convenience. We also offer an equity protection option, and this is where customers can choose to protect up to 50% of the eventual net sales proceeds from the sale of their home. And what this means is that when the home is sold, the customer or the estate can be guaranteed to receive the amount they have chosen to protect. We offer a variable rate and no ongoing fees, and this provides maximum flexibility to our customers. And our settlement fee is $4.95 with a standard valuation fee that is waived if the deal goes to settlement. If the property is valued at over $2 million, we will require a quote for the settlement fee. Now we'll look into our loan criteria. The maximum amount we lend is based on the age of the youngest borrower. The maximum we can lend is based on our customer's age, less 45%, and this is represented as a percentage. We can only have a maximum of 2 borrowers, and other occupiers are allowed who are residing in the property, such as carers or family members. However, they are not protected under the loan. We have a minimum loan requirement of $5,000, except when the purpose of the loan is solely to set up a regular payment to fund the cost of home care and pay home care providers. We take a first mortgage over the security property, and we require this to be of conventional construction and maintained in a good condition. Our target locations include major cities and major regional centres. However, we will assess anything outside of this on a case-by-case basis and on its merits. These tables you're looking at give you an understanding of how much we are able to lend based on the youngest customer's age. So on the left, we have our maximum lending for our standard reverse mortgage product. And on the right, we have the maximum available if the customers choose an aged care option. So for example, if a customer has applied for a standard reverse mortgage and is aged 75, the maximum we would be able to lend would be 30%. And this could be for the purposes of refinancing debt, home improvements, paying medical bills, etc. However, if the same customer was applying to finance living in a residential aged care facility by choosing our aged care option, they would have access to an additional 5%, as you can see, and we would be able to provide a maximum lend of 35%. This brings me to our other loan products, which are the aged care and secondary property options. These are similar to our standard reverse mortgage product, however, have some variances that are specific to the purpose of the loan and the security property offered. The aged care option is chosen to fund. When the aged care option is chosen, it's chosen to fund living in a residential aged care facility. This is where the customer is required to live full-time in a residential aged care facility, and they need these funds to fund the refundable accommodation deposit or the daily accommodation payment, and perhaps even make some home improvements to their home whilst they're living in aged care. We offer a fixed 5-year term for this option, and as mentioned earlier, an additional 5% lend. The secondary property loan is where an investment property or a holiday home is offered as security, and here the property value is scaled down by 25%. For the secondary property loan, the repayment trigger is when the customer permanently ceases to reside in their primary residence. As one of the most regulated financial products in the market, Heartland has developed a thorough fulfilment process, which is regulated under NCCP, the National Consumer Credit Protection Act. And what this means is that we make robust inquiries around future needs of the customer, including things like, have they considered their plans for aged care, the impacts of reverse mortgage on their pension and Centrelink entitlements, and have they engaged family in discussions around their financial needs, and if they've sought financial advice. To assist our customers in making an informed decision, ASIC have developed a Money Smart calculator, which helps illustrate the amount of equity that will remain under different scenarios over a period of time. Heartland provide these projections to all our customers so they can view their equity over time and the impact of a reverse mortgage on their equity. Furthermore, our assessment process is thorough, and our team conduct an in-depth compliance call with all applicants to ensure the suitability of the loan for the customer. Our lifetime occupancy, no negative equity guarantee, and no ongoing repayments promise is what makes us a market leader. Now we're going to look at a typical Heartland customer, with the majority, as you can see, being retired couples, then single senior females, and a small percentage of single senior male customers. The average age of our customer is 72 years old, and they may not have much in the way of super or savings, and are solely living on the age pension, which is not much. They typically are from Sydney, Melbourne, Brisbane, and some from coastal New South Wales and Queensland. They have an average property value of $800,000 and generally borrow about 12% and set the rest of the money aside for a rainy day or set up regular payments to supplement their pension. Common uses, as we went through before, are home renovations, debt consolidations, medical expenses. Now we'll look at a case study that gives you an example of how we helped a customer of ours. We have Jack and Bev, a couple in their 70s, who have applied for a Heartland Reverse Mortgage. They require $100,000 upfront to be able to pay off their current mortgage and make some home modifications so they can age in place comfortably. We calculated their maximum lend based on Bev's age, which being the youngest borrower is 70, subtracted 45 and expressed this as a percentage. From this calculation, we were able to lend 25% of their home value, which at $800K gave us $200,000. So they took an initial advance of $100,000 for repaying their current debt, conducting some home modifications, and left the rest in cash reserve for a rainy day, giving them peace of mind that they could access their funds as they needed, which they did a few years after their initial drawdown. And this gave them the ability to take a holiday with their grandkids and a few more years later, use it for medical purposes. As you can see from the equity projection table, they had a clear understanding of what their loan balance would be in 15 years, but also the equity remaining in their home in 15 years based on a 3% growth rate, which is more than when they came to us for a reverse mortgage. And we have helped over 21,000 customers, and some common themes and feedback that we get from those that we have helped, that it has provided them with peace of mind and the freedom to do the things that they would like to do in retirement. In fact, 94% of our customers surveyed advised that they would recommend us to their friends and family, and also recommend a reverse mortgage. And that is really why we are the market leader in this space. Now we look at the broker proposition. As a broker, diversifying and offering your customers a holistic, full service helps them form a deep relationship with their customers by being able to provide a solution for their needs at every step of life, not just acquiring a home. A reverse mortgage can offer that solution to a growing need in the market without growing aging population. Furthermore, with minimal ongoing maintenance and straightforward application process, it really is an opportunity to reach out to your customer base and referral network for those who may be considering retirement solutions. We have a final poll question, which Rebecca will put up. Do you think you could incorporate reverse mortgages into your business? We'll give that a minute. Yes, that's great. That is great to hear. And, you know, it really is a growing market, and we're very excited to see these results and share these with you. Okay. So now that you have an idea of how a Heartland Reverse Mortgage can help seniors live a more comfortable retirement, you might be wondering about accreditation and how you can find out more about our product. And you'll find all this information on our website, www.heartlandfinance.com.au, under the Broker Portal tab, which has all the information that you need on how to become accredited with us, information on our fees and charges, more information on loan criteria, our postcode tool, and some marketing information and tools that you can utilize to reach out to your customer base and start having those conversations about retirement and living comfortably in the later years. I will now pass it on to Rebecca for some questions we may have from the audience.
Hi, thanks. Okay, we do have one question that's come through, and I would encourage everyone watching, if you do have extra questions, please send them through, because you will know much better than I do what you need to understand as a broker. So you keep sending those questions in. So one question that we have here is, do you see a reverse mortgage product being available for retirement village clients who have a lifetime lease rather than a freehold title?
I'll take that one. Thanks, Rebecca. So at the moment, we don't offer a reverse mortgage to retirement villages. Because of the retirement village structure, we need an independent agreement with the village, and there's some legal implications with that. But it's something we may consider in the future, and it's something that we did offer many years ago in the past as well. What we do is we do offer reverse mortgages to people who live in over 50s lifestyle villages, as long as they own the property completely and there's no caveats on the title that would impinge on the mortgage.
Great. Another question that we have here. If the property still has a high LVR, is it possible to apply for a reverse mortgage? What is the max LVR?
In the table we shared earlier, and we will be sharing this presentation with everyone, the maximum LVR is based on the youngest borrower's age. So based on the property value, and the way we calculate the LVR is we take the youngest borrower's age, we subtract 45 and express that as a percentage. So if we are refinancing a property, if it falls within the LVR and the maximum lend that we can offer based on that customer's age, we'd be more than happy to do it.
Great. That's done. Can you reverse mortgage more than one property, for example, on 3 properties?
Yes. So we offer the secondary property loan, which means you can take out a mortgage on more than one property. In terms of 3 or 4 properties, obviously it would depend on the credit criteria and the risk involved, but that is definitely something we could look at.
Great. Do you have a blueprint in regards to business development and how to go about developing a new pipeline for these type of loans?
That's a great question. We don't have a blueprint, but what we do offer as a value proposition to our brokers is marketing tools to help market the reverse mortgage product to their customer base. We also have a broker support team with our BDM who can assist you one-on-one on how you can reach out to your customers and have those really important conversations about retirement and what their customers are thinking about in the next few years, so you can have solutions for them when they're ready to start executing on those plans.
What we're also finding is that a lot of kids call us to say, can you help my parents? They need help. I can't help them. Could you help them with a reverse mortgage? So we find that the pipeline isn't just, I suppose, people who are 60 or 70, it's the children, and everybody's a child of someone, but it's the children of those applicants as well. So we find that many brokers do have a pipeline ready that they don't realise that they have.
We have a couple of questions here, one from Anonymous and one from Rod, asking about accreditation. So do they need accreditation, and are there any accreditation requirements?
Yep. So yes, you do need accreditation, and you can email us at accreditations@heartlandfinance.com.au to request information. We do have an accreditation module that brokers are required to complete online, and our team will take you through the process of completing that accreditation. You can also call the broker support hotline, and they can guide you step by step on how we can complete that for you.
A question here on how a broker is paid. Small loan sizes, does that mean small commission, but the same amount of work as a traditional loan application?
So our commission structure is actually quite generous. Our structure is 0.88 on the drawn portion, 0.44 on any undrawn portion. So what that means is we looked at the scenario before where Jack and Bev were approved for 200,000, and within the first year or the initial drawdown, they only withdrew 100,000. So the broker would get 0.88 on that drawn portion, and 0.44 on the undrawn portion, which is 100,000. And what they do receive ongoing is 0.22% trail, but also 0.44% on every draw that's happening consecutively after the initial drawdown.
I think with trail, the interesting thing about reverse mortgages is that because the loans tend to grow, repayments are optional. Trail tends to increase rather than decrease over time as well.
Now, I think that somewhere in your presentation you did mention the pension loan scheme. We have a question here. Do you lend to clients who already have a pension loan scheme arrangement?
So the pension loan scheme does have puts a charge on the security. So we would need to repay that debt in order to provide a reverse mortgage.
Another quick question here from Stephen about accreditation. Is it based on the aggregator or directly from Heartland?
It depends on the aggregator. Yes, it is based on the aggregator. You can come through to us if you aren't with an aggregator, but yes, please approach your aggregator on how to complete the accreditation. And of course, we can assist with that too. So you can call our BDM, Brodie Sumner, to take you through the steps of those.
Question from Rod. What are your postcode restrictions? For example, he is in the postcode area of 4670 Wide Bay, Fraser Coast. Do you have any postcode restrictions?
We have, obviously, as I mentioned before, we have target locations, which are major cities and major regional centres. However, we have a postcode tool on our website under the broker portal tab, and you can type in the postcode that you are inquiring about, and that will give you an indication of how favourably we would look at those. It's based on a traffic light system, so green, orange and red. We do look at every deal on its merits and on a case-by-case basis, so please get in touch with us either via the broker inbox or our BDM, Brodie Sumner, and we can workshop that with you.
Another question here. If the mortgage is still higher than the LVR criteria, is it possible?
Usually not, unless the customer has other funds to repay the difference. Because it is a reverse mortgage that grows, we can only be the first and sole mortgage on the table.
Scott asks, you can apply at 60 plus. Do you not have to be retired?
No. So even though this is a retirement finance product, it's not just for those in retirement. It's for people who are still working, who are transitioning to retirement. Just has to be for someone who's age 60 or over.
Question from Liam. If property value growth and allowable LVR outstripped the interest rate, could you top up a reverse mortgage?
Yes, you definitely could. So there is an application process. We do have to do a credit assessment and evaluation again, but we could absolutely lend more if that was the situation.
Ian asks, how long does it take for approval of application?
So look, the general turnaround time, because independent legal advice is required, is a bit longer than a normal loan, and it is dependent on when the customer is comfortable to have a valuer visit their property and see the lawyer to receive independent legal advice. But approval can occur within 1 to 2 weeks once that valuation is completed and we've received all the supporting documents, and settlement can be within 4 to 6 weeks depending on when the customer has seen their solicitor and returned all the documents.
Michael wants to know if you will look at a mixed use property, i.e. zoned commercial because of an office and a cafe in the building, but mainly composed of residential apartments.
It depends on the mixed use. So we will look at those. We will look at those on a case-by-case basis. We have to look at whether it's standard for the area, what kind of property it is, and the specific zoning, but it is something we have looked at before.
Liam says that he thinks he saw something about a 50% equity protection option in the presentation. He says it sounds too good to be true. What is the catch?
There's no catch. I mean, it is one of the promises and protections we offer our customers. And so customers can choose to protect up to 50% of their property, the eventual sale proceeds of their property value.
But the amount that you can borrow is reduced by that amount. So it's not a catch, but there is a reduction on how much you can borrow. Say you were eligible to borrow $200,000. You chose to select 50% equity protection. The amount that you could borrow would be reduced by that 50% as well. So that would be $100,000. That would be your maximum entitlement in that case.
Okay. What are the Centrelink implications of a reverse mortgage?
So we encourage our customers to get in touch with Centrelink and find out, due to their individual needs and the assessments that are done on each person's assets and liabilities, we don't have a blanket rule over Centrelink entitlement. So we do encourage our customers to get in touch with Centrelink and find that out before they embark on this journey.
Usually it doesn't impact Centrelink at all. It only impacts Centrelink if the use of the funds does so. So if a purchase of an asset using the reverse mortgage took them over the asset test limits, or they were gifting, so there's gifting rules. So it depends on the use of the reverse mortgage rather than the reverse mortgage itself. But we find that most of the time there is no impact at all. And we encourage and ask customers to double check that to confirm their own personal circumstances with Centrelink to make sure.
Okay. Final question from Jim. Again, if anyone wants to send in any questions, please, we've got time, so send in any more that you might have. If you don't own your home but have an investment property, can you borrow on the investment property?
Yes, so we have the secondary property loan for those purposes, where you don't have to provide your own occupied property or your primary place of residence as security. With the secondary property, however, we do scale the property value down by 25%. So yes.
Another question's just come through from Stephen. Is there an impact on superannuation when a reverse mortgage is offered?
No. Superannuation is a separate asset. So people can continue to put funds into superannuation and use it however they choose.
Great. Perfect. Another question has come through from David. What is the timing when all applicants have passed on?
To repay the loan? Is that the question, Rebecca?
Maybe, yes.
Maybe.
David says yes.
So after the last person's exited property, whether that's from passing away, moving in with family, moving into aged care, there's 12 months to repay the loan. In the case of the aged care option, it's 12 months from passing or the 5-year term, whichever is the earliest.
Okay. Robert has sent in a message. Do you require customers to obtain independent financial advice from a financial planner as well as legal advice?
No, only independent legal advice is required. We recommend independent financial advice, family discussion, Centrelink discussion, but the only time independent financial advice is required is if part of the reverse mortgage is being used for investment or business purposes, except for when the security property is an investment property.
Perfect. That's all the questions that have come through. Oh no, wait, we'll cut. Liam's come back. We'll take another one from Liam. He's got some more. That's fine, Liam. So he has some more on compliancy. Sorry. One, how do you monitor, support the brokers that you work with?
How do you mean monitor?
So he says monitor support. So I guess, how do you work with your brokers? Liam, feel free to chime in if there's anything you want to clarify, but I think, how do you work with your brokers?
Sure. So we have a dedicated business development manager who is available to workshop deals and scenarios one-on-one. We also have a broker analyst, Klim, who is able to provide that support. So should you need, assistance with pre-ordering a val, or again, scenario support, workshopping, anything that's come through with evaluation. We also have client liaison officers that keep the broker updated in terms of deals that have been submitted for assessment. And we're in constant contact with our brokers, and even brokers' assistants if they require further assistance. As part of our value proposition to our brokers, we hold monthly webinars on topics such as power of attorneys, aged care. So we really like to inform our brokers and keep them updated on our product policy and procedure, but also what's happening in the industry.
I suppose when it comes to compliance, for brokers with the application form, we also have a broker disclosure that we do ask brokers to complete, and it actually goes through the conversations a broker should be having with the customer and what information the customer should receive. Reverse mortgages are a little bit different to a forward mortgage. There's certain compliance obligations that need to be maintained and certain conversations that need to be had with the customer, and that disclosure goes through everything you need to do in terms of compliance.
He also asks, when do you think a reverse mortgage would not be an appropriate thing for a borrower?
So one of the things we do take very, very seriously is elder abuse and vulnerable customers. So when the use won't benefit the customer, when there appears to be undue pressure or influence, or when the loan can significantly impact the customer's pension without a clear benefit to that customer, would be times where we would see the loan as being unsuitable. Or if the loan is being used for, I suppose, an investment purpose and independent financial advice doesn't confirm its of use or it's of benefit, those would be the kind of times where it would be unsuitable.
Ashley is asking if they can buy a property using a reverse mortgage.
Absolutely. So as long as there's a residential property as security that fits our criteria, we could definitely put in the funds on the day of settlement for a property purchase.
Can an applicant take out more than one reverse mortgage? For instance, if they have a home and 4 investment properties, could they have 5 separate reverse mortgages, one secured by each property?
Look, it depends on the location of the 5. If they're all in a row on the one street, you might not look at it. But look, it would really depend on the circumstances, but they can definitely have more than one. And we would assess the, I suppose, 4 investment properties on a case-by-case basis. I think the most we have is 2 loans to a customer, but we'd definitely look at more than that if our risk allowed it.
And what is the interest rate used in a reverse mortgage, and is it negotiable?
So we have a standard variable rate of 5.6%. It's not negotiable. However, it provides maximum flexibility to our customers, and they really value that flexibility and rather than the certainty of fixed rates.
Can a POA apply on behalf of a client?
Absolutely. So power of attorneys can sign and apply on behalf of the customer. We will, of course, need to assess the power of attorney to make sure it can be used for the purpose of obtaining a mortgage and for the use of financial purposes. We'll assess the power of attorney to make sure it's suitable. There's also certain criteria that we'll go through to make sure it's an appropriate use. And in addition to that, we ask the solicitor who's providing the independent legal advice to also provide a certification confirming the power of attorney has not been revoked why the customer can't sign, and that the funds are for the customer's benefit.
Another question on the interest rate. As it is on variable rate, does it mean it will fluctuate with the market?
Sharon, I'll let you take that.
Okay. Look, it is a variable rate, so it does go up and down with the market. We do assess the rate regularly, and we try and maintain it, you know, at a marketable rate and as low as can be offered.
Perfect. Okay. That, I think, is really the end of the questions. If you do have any further questions for anyone that's watching, feel free to send them in. We will pass them on to Sharon and Artie and get back to you. There's the right contact details there. So feel free to get in touch with them. And we will, I think we're going to be sending out a copy of the report and this webinar if you want to watch it back. But I really hope that it was helpful to you and that you've learned something today. Thank you so much for joining. And thank you, Sharon and Artie, for being here and providing us with this incredible presentation. I hope everyone has a great afternoon.
Thanks to MPA for having us. Thank you.
Thanks.